Hey everyone, and welcome back to the channel. Today we're going to know if cryptocurrency is worth the hype. Let's get right into it. There is no doubt that digital currencies have grown significantly. The field of cryptocurrencies has only expanded as a result of the incredible growth of Bitcoin and Ethereum. Aside from initial coin offerings or ICOs, there are now numerous new types of blockchain investment products available, ranging from decentralized finance to non-fungible tokens. Many digital currency enthusiasts believe that these investments will result in a new generation of digital currency millionaires and billionaires. Those who have yet to invest in digital currencies may be wondering if there are compelling reasons to do so. Today, we'll look at some of the reasons why people might want to purchase digital currencies, as well as some other factors to consider before investing. The blockchain technology that underpins Bitcoin and other cryptocurrencies has been heralded as a game changer for a wide range of industries, from shipping and supply chains to banking and healthcare. Distributed ledgers can enable previously unimaginable types of economic activity by removing intermediaries and trusted actors from computer networks. This potential makes digital currencies an appealing investment for those who believe in their future. Investing in cryptocurrency represents a way for people who believe in that promise to earn high results while also supporting the future of technology. The desire for a dependable long-term store of value is another common reason for investing in cryptocurrency. Unlike fiat currency, most cryptocurrencies have a finite supply that is limited by mathematical algorithms. This prevents any political body or government agency from diluting their value through inflation. Furthermore, due to the cryptographic nature of cryptocurrencies, a government body cannot tax or confiscate tokens without the owner's cooperation. While many supporters believe that digital currencies will one day become commonplace, the cryptocurrency market is currently dominated by speculative trading. According to blockchain activity studies, exchange trades continue to be the most common use for cryptocurrencies, accounting for far more economic activity than ordinary trades and purchases. Skeptics of cryptocurrency such as Warren Buffett, Bill Gates, and JP Morgan CEO Jamie Dimon have all warned of a potential crypto bubble. Cryptocurrencies are not immune to speculative manias and irrational exuberance. Other assets such as cannabis stocks, technology stocks, precious metals, and even houses have also been subject to market bubbles, which ended badly for many investors. As a new technology, some speculative behavior is to be expected in the cryptocurrency space, especially as blockchain technology matures. New investors, on the other hand, should be wary of psychological traps such as herd instinct, FOMO, or the greater fool fallacy, which can mean the difference between a calculated risk and a foolish one. One of cryptocurrency's most impressive and unique features is also a significant liability. Because cryptocurrency does not rely on a central intermediary, the user is responsible for securely storing the cryptographic keys that control their blockchain address. Investors who choose to invest in digital currencies should be aware that a number of special security measures are required, and that even those measures may not be sufficient to protect their holdings from hackers who are constantly refining their techniques. Theft is still one of the most common threats to cryptocurrency users, with hackers stealing billions of dollars in tokens from exchanges, wallet software, and ordinary users. Furthermore, there are a variety of schemes to dupe users into handing over their tokens, such as doubling scams, social engineering, market manipulation, and even bogus ICOs. However, another significant threat is the users themselves. Unlike other applications, most digital wallets cannot be reset if the password is forgotten. Users have lost hundreds of millions of dollars in cryptocurrency as a result of forgotten passwords or misplaced devices. Despite the risks, cryptocurrency and the blockchain industry are expanding. Much-needed financial infrastructure is being built, and institutional-grade custody services are becoming more accessible to investors. Professional and individual investors are gradually gaining access to the tools they need to manage and protect their crypto assets. Crypto futures markets are emerging, and many businesses are gaining direct exposure to the cryptocurrency industry. Block and PayPal, two financial behemoths, are making it easier to buy and sell cryptocurrency on their popular platforms. Other companies, including Block, have invested billions of dollars in Bitcoin and other digital assets. In early 2021, Tesla purchased $1.5 billion in Bitcoin. By February 2022, the electric vehicle manufacturer reported holding nearly $2 billion in cryptocurrency. Since 2020, MicroStrategy, a business intelligence software company, has been accumulating Bitcoin. By the end of 2021, it had $5.7 billion in cryptocurrency and stated that it intends to buy more with excess cash generated from operations. Although other factors continue to influence the riskiness of cryptocurrency, the increasing rate of adoption is a sign of an industry maturing. Individual investors and corporations are seeking direct exposure to cryptocurrency, believing it to be safe enough to invest large sums of money. While there are numerous reasons to be skeptical of digital currencies, many traditional investors have embraced the new asset class. The blockchain space is frequently described as a transformative industry, capable of disrupting the world in the same way that the internet did in the 1990s. However, the supporters of digital currencies should be careful to understand the risks of cryptocurrency before they start investing. They should take the time to understand the most common pitfalls that novice investors face, in addition to mastering complex security protocols and thoroughly researching their new investments. That's it for today. If you guys enjoyed the video, make sure to hit that like button. Don't forget to subscribe and turn on that notification bell so you never miss out on any future content we'll produce for you guys. We're signing off now, but we'll be sure to catch you all in the next one.